Coming up in this show, I'm going to bring you my opening comments on the markets. Ari's going to show you a sample of Future Speak, which is a member video where he looks at natural gas, which has been getting slammed. Katie's going to show you analysis of the dollar and the euro. An important bottom may be forming in the dollar and capitulation may be underway. And she's going to show you examples of related option strategies using Tastyworks. Then I'm going to bring you my analysis on the stock market, looking at SPY and giving you our upside projections, which were hit for January, and looking at what is next.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, stock market buyers finally gained traction last week after what was a brutal end to 2022, as tax selling really hit the markets and continued right through the end of January. Monday, stocks moved up right out of the gate as the Bank of England chief said there's signs of inflation that is easing. And the S&P 500 was up 55 points on that news, really strong. But then Fed speak came out, which was warning that Fed funds are likely to get over 5% and stay there for a long period of time. And the market went from those big gains to a loss. Tuesday and Wednesday, we saw buyers back in the market and hoped that the CPI on Thursday would show better numbers. With both days showing solid gains, breadth was very positive, and improving breadth has been notable throughout this whole week. But there were warnings as the meme stocks had massive gains. Looking at Bed Bath & Beyond Tuesday through Thursday, the stock more than doubled during that period. So I say that's a warning because if those are what the investors are interested in, there's something actually weak about this gain. Thursday, the CPA came out exactly as forecast. The markets chopped widely on that news. But investors do show a desire to keep buying as interest rates are moving down and the dollar moving down, and all of those things are encouraging buyers. The overall, when you look at that inflation report, well, the headline was down 0.1%. And that is what is giving buyers a lot of hope that inflation is actually turning down. Stocks stayed strong on Thursday as yields moved down, and they moved down very sharply as we saw the best 30-year auction in years. 10-year notes moved down as low as 3.43%. And Fed comments followed that regarding those numbers that were plainly hawkish. They don't want the markets to think that it's all over and they're going to start to ease, and I have more to say about that. Friday, bank and airline stocks. The earnings were not all that bad, but they came along with warnings, and that weighed on the indexes as those bank stocks pulled back and airline stocks had pretty sizable dumps. The indexes moved lower as autos also weighed on the market, and that was after Tesla cut prices in the U.S. and the EU sharply, and that follows the China cuts, and Tesla moved down sharply about 4.5%, and you really have a condition of slowing economies and competition beginning to run Tesla down. That stock is probably headed under 100 this year. Indexes, they were down nearly 40 points in the beginning of the day here on Friday, but then recovered to almost unchanged. And those buyers are relentless. They keep coming in looking for the downside movement, if any, as opportunities to buy. And I've got a lot to say about the indexes coming up in a couple of moments. Lower long-term rates have metals moving up very strongly as the gold market soars over 1915. And this is just nearly a $300 gain off of its lows. And it shows you what could happen when interest rates fall. Stock market followed our analysis very closely over these last months and weeks. We expected that the market would rally up into January. And thanks to all of you that sent me the great emails and comments on social media regarding our analysis. Our projections had stocks rising into late January, and that's still on track. However, we continue to see risks coming in coming months, and we have more on that later. People are asking me, since inflation has peaked, what would cause the stocks to go down again? Why should the market fall? And when you look at traders in the bond market, well, they seem to agree. They have pushed 10-year yields down from over 4.3% down to about 3.4%, where we're trading very close to that right now. And I've said several times that inflation is not going to come down that fast. And interest rates, if they fall, well, then the commodity market was going to rally. And that would cause a kind of a negative feedback loop that would embed inflation into the market. I want you to see what's going on in our analysis in the DBB, which is very interesting. DBB is the base metals ETF, which has equal holdings of aluminum, copper, and zinc. And our analysis, and if you're brand new to this is cycle analysis. This big decline, of course, came in here with all of the markets as the liquidation phase was going on, but then it began to base out and it completed its base right over here. And we had been looking for it. In fact, looking at the copper market, we said copper was a rocket ship waiting to take off, and that has taken off already. This is DBB, and you could see it's 2 weeks in its advance right there. That's very, very early, especially after forming a base. And we're projecting that we're going to see these metals moving up pretty significantly up through this period out over the next coming months. So what this says basically is that there is likely to be upside moves in commodities. And this is one of the reasons that I think that inflation is really embedded in the market. If you look at other than the base metals, gold, silver, platinum, they're moving up with it. And the energies, they're rebounding also. And food inflation, well, that has not come down at all. And we see that the wheat market looks ready to turn up in a significant way. So we think that based on what this DBB chart is showing us, that's the base metals and all of these other commodities that are turning up, that what we said originally, that if interest rates came down, commodities would move up, and that was going to prevent any kind of a big decline in the inflation, then I think this is proof of what we had said would actually happen. Now, there's really more to it. The Fed is very clear. They do not want markets to undo their work, and especially when they see something like this. This is the wage growth tracker that's put out by the Federal Reserve of Atlanta, and you can see in here how, wages over these last couple of decades, they were moving moving up at very, very low rates right through this period here, but then exploded in here. And you can see that it's only slightly off of its top, still growing at over a 6% rate per annualized rate, as it had this big breakout from this level, about 3.5, 3.75, 3.75%. This little dip doesn't mean anything, and the Fed knows this, and wages are probably well embedded into this market, and that is likely going to give a very significant challenge to the Fed. And like I said, they're very clear. They don't want the markets to undo their work, with the likelihood that commodities will move up. And with stocks and interest rates moving down, they're likely to get very tough in coming weeks. And of course, remember, they are still undoing their balance sheet, and they may get aggressive like that. Maybe look for some sort of an operation like a reverse twist in order to start getting the longer term rates to come back up. I think they're going to be very tough. That is likely what will cause the next big downside in the markets. I think that overall the markets have it wrong, and interest rates coming down based on the way they have been are likely going to keep the situation where the commodity markets are moving up, and you will see stuff like this going up even higher. The background in here is likely to get real tough, and the discounting of a big recession that the interest rate markets are doing, I think they're wrong about that. We continue to look for a risky period into February through April for the stock market, and I'll show you that. I'll show you the downside targets when I get to that coming up in just a few minutes, and where this upside move in the market is likely to stop. Stocks for the week here at midday on Friday. Well, the index is up between 1.5% and 4%. The Dow is the weakest because it was the strongest before. So they're now catching up. The other indexes are catching up. And the Russell was the strongest, up about 4%. And that's because the rates declined so much, and that favors these zombie stocks out there that need to borrow so much money. Bonds 30s were up about 1.5 points. 10-year yields plunged 12 basis points, now trading at about 3.45%. But it's going to be very hard for them to get below 3.4%. And don't be surprised if we see in coming weeks they're back up around 3.7% or higher. Gold up a strong $44. Silver at about 23 cents, not quite as strong. Platinum market was strong, but now that's hitting resistance and gave you a reversal sign today. So we may begin to see some of these metals starting to give some of this back, and the dollar be able to get a rebound. Dollar down 1.6% in a capitulation, we believe, with a bottoming phase right now. And it's moved down in the time frame that we thought and longer, and moved down through our targets to lower levels. It has been quite weak, and that's going to lower the upside projections for the next rebound. However, we do think that rebound is not far away, and Katie's going to talk about that in a couple of minutes. Oil, big gain, up over $5.50 on the China reopening and these lower interest rates. And that's another thing to look at that's going to keep inflation from being able to come down a lot. We still think that the oil market and the energy markets have about another month of risk, but the downside projections we had, we're really looking at they may actually be not quite as low as we originally thought. I want you to make sure that you go through our website, and you'll be able to see what amazing things that we have. You can get acquainted by taking our level 1 special that we have coming up. On YouTube, subscribe to our channel, click the notification bell, and like this video. Give it a thumbs up. On Twitter, follow us at askSlim. And any questions you have about our memberships or things that we show you in here, you can write to Matt at askSlim.com. One more thing, I will be speaking live on January 19th at 10 a.m. Eastern Time at the Wealth 365 Summit. It's a great event. There's more than 50 speakers there from all over the financial world. Fantastic event. And I'm going to present on short-term trading, riding the big impulses for greater profits, and share with you 20 reasons why day traders or short-term traders miss their best profit potentials. And we're going to give away a cycle analysis workshop. If you're watching this on YouTube or Twitter, I'm going to post that link for you to sign up for free. And you can also write our team at team@askSlim.com and ask them for that special free link, and you will be able to sign up to see my presentation coming this Thursday. All right, that will be very, very exciting. This is a preview of Future Speak. We're going to look at natural gas. RV offers a great lesson in cycle trading here that I think you're going to really find interesting. This is a sample video from our Future Speak show. It comes out every Wednesday. RV is just a master at cycle analysis, and he brings great teachings and great analysis on 24 different futures contracts and the indexes. He's going to show you what he does here and our cycle work in natural gas.
If we go ahead and move over to /NG, you can see natural gas, pull up the weekly chart. Again, this has just acted beautifully in this period of risk late in the cycle, and you can see how it acted. Just like here, that false rally, sell off, form that low, false rally here, sell off, and now we are in the very late stages of this corrective period in NG, just acting exactly the way you would look for when you're late in a cycle, with every little rally failing and just a washout of all of the long side players in this name. That next low is due 1212 to 116. If we go ahead and shift over to the daily chart, so this is the daily cycle analysis for natural gas, and this is really what I want to emphasize, because we did mention this live when it was happening as a key level that would need to be violated for this to turn meaningfully more negative, and that is actually what ended up happening. So first we had this old low right here at 5.575. Okay, so that is the dominant cycle low. That had a violation right there on 12.5. So that said that this was the rising phase, and that now this cycle would be pushing on the downside. Okay, so keep that as the overall frame of reference. After that, you can see that we formed this minor low slightly early, then got into that rising phase. That was the rising phase of that cycle. Now, once we lost this low right here, we said this live to our members, if we lost the 5.208 area, that would say that this rising phase ended early, and we are in a corrective period on that minor cycle with that dominant cycle already pushing on the downside. That would be a very risky pattern, and you can see what happened from that point, 5.208 all the way down to sub 350 on the downside in a very short window of time where every little uptick got sold. This is exactly what you would look for when you see that kind of pattern where you have a minor cycle that fails early, and that's exactly what happened in NG, and I just want to highlight it so that way you can keep this in your mind for the next time that it happens, because it certainly will, where you see a left-hand translation already in place on this dominant cycle and then a weak minor cycle that has a breakdown, just like what happened here. It sets up a very negative pattern with both of these energies pushing on the downside, and that's why we saw this kind of selling off of that breakdown. Okay, so hopefully that's helpful. Now, in terms of the overall cycle pattern, we have our next low due towards the end of January to the early part of February. Levels on the downside come in from 374 to 262.
That was great, great work, Ari. Really love the lessons that you gave there. This is Katie, and she's going to bring you the dollar and euro analysis. She's going to show you also examples of related options, as the dollar is now in capitulation and likely to turn to the upside. What she shows you here are trading ideas using the Tastyworks platform.
Hi, this is Katie with askSlim. Our analysis on the dollar index, $DXY, shows that an important low is due to form. This is the weekly chart of the dollar index. On the bottom, we have a dominant cycle that is 52 bars in length, and it is broken up into two minor half cycles. We also indicate a period of time of a few weeks plus and minus when these ideal cycles bottom with these blue vertical dotted lines, and we are in that weekly cycle timing window now. We also have this purple and green ribbon on the chart. It's our proprietary momentum indicator, the reversal scout. It is still negative as this goes through the bottoming process, but it is beginning to curl up. We'd like to see it turn green to help us confirm a low when the dollar index begins to move up. Now, the dollar is inversely correlated to the euro. Notice this decline on the dollar chart. I'm going to show you the euro chart in a moment, and you'll notice that as the dollar has dropped, the euro has risen. Here is the weekly chart of the euro US dollar cash pair. So if the dollar starts to move up, then the euro should start to move down, and you'll notice that we have a timing window for that coming up. That ideal window starts at the end of this month. Now, you can certainly trade the cash pair. I'm going to use the euro futures. Here is a daily chart of the Euro Futures /6E. We've just started a new daily cycle, and this blue box up here at the top is our short-term target zone. What we're looking for is for the euro to get up into that area between 1.087 and 1.096. Then we want to see price stall and for momentum to turn negative. That could set up a good shorting opportunity going into this mid-February timeframe. Going over to the Tastyworks platform, I have loaded /6E, and we have two possible expiration cycles, February 3rd and March 3rd, 23 days to expiration or 51 days. I'd lean toward March to give ourselves extra time. We also have a relatively high IV rank at 37.4. So let's look at a short premium trade idea. Looking at the options chain, you'll notice that the strikes are in increments of 0.005. The notional on Euro futures is 125,000, so that means that a spread width of 0.005 is equal to $625. Now, as I mentioned, we'd like to get that downturn in momentum before placing the trade. If that condition was being met now, there are a number of bearish short premium trades. We could simply sell a call. The 1.095 strike corresponds approximately to the top of that short-term target zone. It would give you a credit of 0.0077, which we have to multiply by 125,000. So our credit collected is $963. That's our max profit. Our max loss is infinite to the upside. This trade in my account uses about $2,500 of capital, and we have a probability of profit of 70%. Now, many people do not like the infinite risk associated with a short call, so we could also do a credit spread. You can make it as wide as you like. Just remember that each increment is worth $625, so if I widen the spread out by 1, this spread would be worth $1,250. Max profit in this case would be $338. Max loss is $913. So that is about a third of the width of the strikes. Depending on your account, it doesn't use much capital, about $400 in here, and your probability of profit drops to 65%. One other thing I'd like to show you is that Tastyworks has micro futures. If you click over to the Active tab, down here you will see /M6E. Those are the micro euro futures. So we can wait for our bearish condition to set up and then simply short the micro future. You'll notice over here that it actually uses less capital than doing the spread, and your profit potential is not capped. So to learn more about all of the tools and services we offer our members, please visit our website at askSlim.com.
Super job on that, Katie. Remember that what she gives you is examples, and the market's actually moved since the time that she has done this, as it's in this capitulation stage, and lower prices there, but you'll really get the sense for the style and the approach. And now watch this. You saw the great job that Katie did using the Tastyworks platform. You should get that platform no matter what you're trading, but it is really great for option trading. Just go to our website at askSlim.com, click on Marketing Partners, come down to Tastyworks, and then click on that. And you're going to be able to get their great specials, unbelievable cash bonuses you can get back, and the lowest commission rates out there, and their fantastic platform. No matter what you trade, this is the right platform for you. Stocks, futures, crypto, all there in Tastyworks. Just click on Learn More, and you'll be able to see these specials, and click on Get My Bonus, and you'll be opening up the Tastyworks account right through our website. It helps us, and it helps you when you get these great prices on this great platform. So please go to our website right now and open up a Tastyworks account. All right, this is the stock market analysis, but first, you can get our great analysis every single day. Matt puts out a special, and that's in our level 1 membership, and all you have to do is sign up for this incredible deal. You can get great analysis that we put out every single day in our stock index report daily. That's a snapshot that Matt puts out, and also level 1 includes our Slimulator Momentum Tracker, over 1,000 symbols that scans and sorts for longer term position traders and investors. You'll get our Spider ETF weekly review, our new trader workbench, and you're going to get the Market Week Show archive, so you can go back and review everything we say, our live replays, which show you tons of teachings that we do, and special free videos that we put in here for level 1 with some new ones added recently. All of that you get just $45 for 3 months, $15 a month. It's incredible, the analysis that you'll see, including our charts, some of our proprietary indicators, and great commentary and important levels from Matt. So sign up for level 1 right now, just $45 for 3 months. All right, stock market analysis, S&P 500. We're going to look at the SPY, and we're going to take a 1 to 3 month view as we look at this. And I will bring in now the SPY chart. And we always like to do a little lesson at the beginning of when we do this out in social media world, because a lot of people do not are looking at our analysis for the first time. On the bottom here are cycle brackets. They are representative of market energies, periods where markets advance or where they go into corrective phases. We add into that several other components to our analysis, and that is our momentum indicator. In this case, this is the reversal scout on this weekly chart. And we look at support, resistance, levels, and configurations in the cycle formations in order for us to do the projections that we do. Now, the big yellow areas that you see right over here are when important downside nesting comes in the energies in the market. So it's likely to get sold during that period, and sold during that period as are liquidation periods right in here, as you see. And there's another one coming up here in February, March, maybe even into the beginning of April. These two vertical lines that you see here are showing you the range of time that these cycles will likely nest into right over here. And in that time period is when the energies of the market normally are pushing to the downside. In other words, it's investor liquidation period right over there. Now, we had talked about that the market was likely to move up. I'm just going to take a closer look in here, and that is this period right in here. You can see the minor cycle rising in here, and it's rising against the downward momentum that we see right over here. That gives us some sense that the rise is likely to stall, and it's moving against this downside momentum, as you see right over here, and it would stall in this area right over here where the resistances are. That resistance is built off of this peak down to this trough right over here in this declining cycle. Then once it stalls in here and the sellers come back in, you get into this period of risk where there are actually 3 cycles coming down into that time period. That makes this the risky period. But how exactly, when it was over here, how did we get some indication that the market was likely to be moving to the upside past the level over here where it was just at the beginning of the year. Well, Matt did a great lesson on that just yesterday. He's done about 16 of these lessons, I believe, and just a fantastic job. And I'm going to show you that right now. As Matt, he did this long piece in here, and this is a clip from his trade planning session. And this was just from yesterday, and he'll show you our slim ribbon PO that really indicated that the market was setting up for another upside move.
Okay, you can see the slim ribbon right here went green or positive. So then the slim ribbon PO colors itself just like the candles do green to give us a visual cue of what the bias is, what the condition is. When the slim ribbon PO serves as a leading indicator is when you rally and then you start to pull back, right? So the slim ribbon PO goes into the oversold. Then what we're watching for is how deep is the decline. Typically, if it stays shallow and we're already in a positive condition, the arrow lets you know that we've come out of the oversold condition and now we're moving back into the more dominant, a bullish condition, which established itself back here. So, and then that's why I say it's leading, because it's letting you know that it's a confirmation, there's a signal. It's not we don't do buy sell signals. This is a confirmation of a bias or a momentum condition. And it's suggesting that there's a likely continuation. And that's why if you combine, our techniques, take the swing low, swing high analysis, we had a swing low here, we had a swing high. As a trader, where's my entry signal? Boom, you get a slim ribbon PO, could be one example. You can have several of them. So as I was just describing, what are like trade entry opportunities? Well, I gave one here where you have a signal that comes from the slim ribbon PO suggesting that there's a continuation. What's the trend? I want to be with the trend. So once the 15-minute turned up, so I'm looking for that pullback into support, and then all of a sudden I get the green reversal scalp plus the green slim ribbon, boom, trade on.
Great work on that, Matt. Just a great look at that setup right there. And now let's just go back to our analysis here. So Matt showed you that our intraday analysis, our analysis was showing that there was likely a momentum resumption to the upside using the slim ribbon PO. That's a level 4 tool that we offer, and it's usable on the Thinkorswim platform. So that tool really gave a great indication that the market was getting ready to move up again. So you got that big move up here on Thursday. There's some residual buying coming in as the market was down 40 points here early in the day on some bad bank earnings, and Tesla moving down and hurting the other motors as it cut prices, the other auto companies and the bank stocks starting to report, and those giving decent earnings on the top line, but giving warnings also. There's a lot of warnings out there, so the market's down a little bit right now, giving some of that back as it begins to stall in this area. However, our analysis on the short term really points to the fact that the market is likely to continue to the upside, even though there could be a little bit of pullback in here. If you look at the daily chart, which you could see as a level 1 member in our snapshot that Matt puts out every day, it shows on there that our upside projections are out into the 3rd to 4th week of January. So it certainly could stall over here, but we're looking at this area over here as an increased possibility based on the magnitude of the advance. So we had originally talked about 403 on SPY, and this is 406, a very important intermediate 50%. This is where the upside projection is possible. We had rated it getting up to this area as likely and up to this area as less likely. However, now that's improving, and it's more likely that it can get up to 403 to 406 in this period coming out in towards the end of January. Then we get into this period of risk that I talked about for a long period of time and talked about in the beginning of the show. If you did not watch my opening monologue, I talk about what could push the market down again. And there's so many people writing and saying, well, the market shouldn't go down again. Why should it? And I talk about the reasons about that in the beginning of the show. So if you're just watching this on YouTube, just this clip or scrolled forward, you might want to go back and look at that. So this projection right now is either stalling in here, which is possible, or getting up in here to 403 to 406 in SPY, and then a lot of risk coming right in there. Down in this period over here, where we're looking for a decline, it's either the end of the bear market, in our opinion, as it comes down and tests or breaks below those lows to as low as potentially 320 here. But depending on how high this gets up here and how long it lasts, it could be a test of this level, or it could be where it doesn't make a lower low. If it comes down and breaks this or tests it, well, you know it's all part of the ongoing bear market and probably getting ready to bottom. However, if it pulls back on here and does not test this low, then what it will have meant is that this was actually the end of the bear market phase and the beginning of the next bullish or bull market phase. And then this period out over here in April, May, June, July, as we said in our year-end show, is a more favorable period. And we are looking for this to be a somewhat positive year for the stock market once we get past this period right over here. So that's a little longer look than I was looking at, but you can see here, period of risk, late January through early April is right in here. And I think the odds are pretty good that if you're an investor and you wanted to do some buying, that your opportunity to do so is going to come during that period. I hope that was extremely informative to you. Remember that I'll be speaking at the Wealth 365 event this Thursday, January 19th, 10 a.m., looking at short-term trading, riding the big impulses for greater profits, plus 20 reasons why day traders miss their profit potential. We'll give away a cycle workshop at that event. And if you're on YouTube or Twitter, please find the link to sign up for that for free in that description, or write to my team at askSlim.com, and say you want the Wealth 365 event link, and they will send that to you. That's it. Make sure that you learn about our website. Head over to askSlim.com. On YouTube, subscribe to the channel, click this video, give it a thumbs up, like the video, and watch our member videos in the playlists and past shows. Twitters, follow us at askSlim, and any questions you have, write to Matt at askSlim.com. That's it. I want you to be so incredibly careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show.